Welcome back. You're watching Commodities First right here on ET Now, and let's jump straight into the discussion on precious metals. Gold has been well, quite a victim, I must say, in the week gone by. We have seen it slip and how, and of course from those levels of $1344 per ounce, it's been quite a decline, especially in the last couple of weeks. This week as well, save for Friday's session, that's today's session, when we did see a bit of a rebound, as you can see on your screens. We even touched a level of $1284 per ounce on an intraday basis yesterday, and you could attribute it to the fact that we are seeing steadiness in the dollar, and I would say that that's perhaps an understatement. Let's discuss more in the precious metal space with Bernard Dahdah. He's the senior commodities analyst with Natixis. Bernard, thanks so much for joining in on ET Now. Is it the competition from the US dollar as, you know, your veritable safe haven asset that's causing this turmoil in gold prices? Because world over, macro news is not that great.
Yeah, you know, the correlation between gold and the dollar is probably the main driver behind the price of gold, is the dollar. So what we've seen since the end of February is a much stronger dollar, which has gone up by almost 2% versus other baskets of currencies. But in our view, this very strong dollar is not something that's going to remain for the remainder of the year.
All right. Bernard, then let's get to the other part of the discussion, the other part that I was telling you about, and that is with respect to, you know, geographies world over, a flagging of slower growth. In general, I think the tone seems to have become dovish. ECB has already given their dovish tone. China as well has, you know, increased fiscal stimulus. So in the midst of all of this, how do you see gold, you know, as an asset?
Yeah, you know, our outlook for gold for the remainder of the year is a lower price, a higher level of gold prices. We could see gold prices even reaching 1,400 by the end of the year, according to our analysis. Much of this is on the back of a weakening dollar. We think the dollar is abnormally strong, and we have a few reasons why we think the dollar will come down. One of them is growth in the U.S. we think is going to slow down this year compared to the previous year. We've got full employment, so the possibility, and full productivity, so the possibilities of the economy continuing to expand is somewhat limited. The other argument we would put in is the tax cuts that President Trump introduced. We think there's going to become a negative impact on the economy, specifically on the budget, on the widening budget deficit. So that's another reason why we see a weaker dollar. And also, thirdly, is the Fed rate hike cycle. We think that we've reached the end of the Fed rate hike cycle, so we don't expect further rate hikes.
Okay, but while that's that, would you worry about a likely end of a US-China trade war? Would you be worried about what impact that could be having on precious metals?
You know, it's interesting because it's hard to assess the impact of, you know, how much have precious metals benefited from the trade war directly. It's not something that we've been able to measure through direct correlation. We've seen the dollar going stronger and stronger. We think that should there be a resolution by the end of this month, then we could potentially see actually base metal prices benefiting from this.
Okay, fair point. Bernard, thanks so much for joining in on ET Now and giving us your take on how precious metals could move. Bernard, of course, is quite optimistic. In fact, he believes 1,400 as well could be on the cards. So ladies, beware when you make your jewelry purchases from here on.